Most of them are occurring in tertiary markets. And it's not surprising because when you look at the trend in the 2003 through 2007 period, there was an increase in retail construction. And largely, a lot of that population growth into the tertiary markets was as a result of housing and the trend to get out in the suburbs and the trend to get out in the outer suburbs. So retailers followed population growth. And that's where we're seeing most of the closings.
So when you say a tertiary market, you mean what exactly? And so if I translate what you just said, builders overbuilt in markets that ultimately didn't grow as fast as they thought they would, or that experienced job loss and population decline where they expected it to grow.
Yeah, absolutely. So when I talk about tertiary markets, it's the difference between a major market, which would be your Boston, your New York. A secondary market would be your Austin, your Charlotte. A tertiary market would be somewhere out in the suburbs that's a much smaller environment, and population growth is much slower. We have seen the reversal of not only the construction boom, but we've seen the reversal of population growth from those areas back into the central business district.
So which companies are most exposed in the markets that you're talking about?
So I'm not a company analyst. I'm a macroeconomist. So from a macro standpoint, when you look at those particular companies that have been focused on middle income, like your Kmart, like your JCPenney, where many of those consumers were late to the expansion, that is where we're also seeing a lot of the fallout occur.
So the big market, big glam malls, the South Coast plazas in Southern California, Short Hills, Tyson Corners in Northern Virginia, they're going to be all right, and their owners are going to be all right. Where the problems are going to be is in those secondary and third tier markets where the economic conditions aren't so good.
That's right. Macroeconomics is playing a big role. In this particular recovery, more affluent households had the advantage of financial asset appreciation through the stock market and also through home prices. And so those particular malls in those areas, those so-called Class A property spaces for malls, those particular malls are doing much better.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.